Yeah, absolutely. We can go over CCL. I'm also going to make a video um, about CCL and my top 5 tips for trading the open. Um, I will go over that video. I'm going to post that video as a weekly video probably next week. Can everybody see the chart okay? Just let me know in the live chat. Guys, if you want to ask questions or anything like that, you can go in the live chat here on YouTube. Should help you out. Yeah, so first off, guys, CCL was a banger, absolutely. I'll go over CCL for you guys. So I'll just give you a quick rundown of like how the trade, the live stream is going to go, and then we'll talk about why I saw, what things I did on the trades that we did take, and then we'll go over both the wins and the losses. And then the last 20 minutes of the stream, I'll cover all the questions that people have. So it'll be like free flowing. If you have questions, just shoot them my way. I'll try to answer as many as I can. We can go over like different ways that you can go about learning how to chart, like going over some simple basic questions, all that kind of stuff. But one of the first questions someone had is asking if we could go over CCL from today. So guys, let's go ahead and talk about why CCL was moving in pre-market. CCL was moving because last night they announced that the last week of bookings, right? So for the last, I believe, last week of March and into the first week of April was their busiest week of bookings, I think in like the last decade, which is absolutely insane. It definitely reconfirms that theory that, hey, COVID's over. People are trying to get out of the house, go have fun, go do things, right? Go on trips, go on cruises, right? That's a big confirmation of that. Now, one second, guys. All right, guys, let's go over trading this off of the open. Now, I'm going to make a weekly video about this, so if you don't catch it all tonight, it's okay. I'm going to make another video about this, but I was going over on voice, hey guys, this is my plan on CCL. When something moves off news like that, you are likely going to get a big move off of the open, at least initially, even with the market being overall a little bit weaker, right? If something is moving on news or earnings or something like that, usually it will have some relative strength versus the overall market. So even though SPY and QQQ were a little bit dicey those first 15 to 20 minutes, if you're trading something on news or earnings, it's obviously more often than not going to have some relative strength. Albeit, if you are trading something directly off the open, guys, because you are trading off of the 1 minute candle and you don't know what could happen, right? When open happens, you could just have a ton of selling volume. And if you're filling a trade during the first minute or two, I always size down a little bit. So CCL was a higher confidence lotto for me. That means I'm taking about half the size of a normal high confidence play. But I really like the setup. It's just maybe there's an outside variable like the fact that it was the open, right? So on CCL, what we saw, this is the 1 minute chart. So if you're following along, we entered in on this first 1 minute candle at 9:31. I saw this major wick form down to this 2050 level. My plan was if that first 1 minute candle closed over 2062, I would enter the calls. I got a great entry on those calls right as this first 1 minute candle closed. And that was a beautiful entry, guys. Entered those calls at 0910. Ended up exiting most of those calls. I exited a little bit up here on the break of pre-market high, which was this 2083 level. Now, a good question that someone asked is like, how do you know when to scale out, right? Well, guys, the first target that I usually have when I am trading something off of the open like this, right, is going to be that pre-market high. And I knew that this was a good trade setup. Someone asked like, well, how do you know when to take this trade? I mentioned it on the pre-market scan and on the watch list, but we had a major daily breakout here, and I'll cover that in a few minutes. But going back to the open 1 minute, I was going to try to show you guys that daily chart right there, but since I'm on the 1 minute, I'm like really zoomed in right now. So, guys, that first target that I always have is my pre-market high, right? So in this case, that was that 2084 level. That was the first area that I scaled out some of those contracts, and that was on that second 1 minute candle. At this point, those contracts were up about 50%. Once we cleared that pre-market high and we saw a strong buying volume candle to the upside, I scaled another 30% of my calls on the third 1 minute candle. Oftentimes, I am going to be scaling out right before that first 5 minute candle is even done forming, because on something off the open, it's a take gains quickly, right? Especially if you're trading something news related. So I was scaling out on that third 1 minute candle. At this point, those calls were up over 160%. I ended up scaling the majority of my calls here on this last 1 minute candle before that first 5 minute candle formed. So as you can see off the open, we had 1, 2, 3, 4, 5. That was our 5 minute candle close. It was a very bullish close up into this 21.21 area. I was out of 80% of the trade at this point. My target was 21.63. We hit that almost to a T, and I was very happy at this point. At that point, I was just riding runners, and I kept some runners into this 2140 area, and that was where I scaled the last 15% of the trade. That was over 300% at that point. So I know that's a brief kind of trade recap. A lot of questions I get, guys, are like, how do you know what to play off the open? And that is really a testament to time, right? Experience, knowing what news is going to move well. And hopefully I did a pretty good job of preparing you guys this morning on the pre-market voice for this trade. Yeah, I didn't take SQ today. I didn't take the SQ trade today. It was my top watch, but that tape was absolutely killer for growth stocks. So it was definitely very, very tough. So I didn't end up taking the SQ trade. I definitely can go over Verizon and why the first 1 minute candle on CCL. Okay, so guys, if you're wondering why I entered on the first 1 minute candle, so that first 1 minute candle, and this is going to be important because if you look at my watch list notes from this morning, I said if we confirm over 2062, right, which was the daily breakout level. So in 1 minute, I'm going to show you guys the daily chart. So keep this in mind. But that 2062 level was key. So I entered in on the close of the 1 minute candle over 2062. That was my plan, right? I had my buy order ready. And this is one tip that I'm going to go over in the video. But if you hear me talking about, okay, guys, like I literally tweeted, I said, hey, I'm going to take CCL calls off the open. This is the strike I'm taking. Like I gave you guys the entire trade before I took it. The reason that I took the trade there on CCL, right, was because there was a daily breakout level at 2062. So my level on my chart coming into the day was, hey, if that first 1 minute candle closes over 2062 and confirms that that is now support, I'm going to enter into the trade. Now, the risk is that the market's only been open for a minute, right? So you could get a major confirmation candle to the downside. This is just high frequency, very fast trading, right? When you're trading on a 1 minute candle time frame, right? Yep, and so that's a really good point. Someone just said, I had my phone open with the call order ready. This is going to be one of the tips that I cover in the video, but I'm going to go over it for you guys right this second. So if I am on the pre-market live or on the voice right before market opens and I'm like, hey guys, I'm taking this off the open. This is what I'm looking to take, right, on this trade. What I'm doing at that point, and maybe it's my fault for not kind of like explaining this to like like to an nth degree beforehand, but guys, I'm on this page right here on Webull, right, which is the option strikes, right? I'm on that page and I have my strike price picked out, and I'm right here ready to fill my order on the strike that I want. I'm refreshing. Personally, I believe that those fills go through fraction of a second faster on your phone than on desktop. And personally, I am fine with filling the order on my phone. I honestly feel like I'm better at it in terms of like quickness. I don't use hotkeys or anything like that. And when I fill that order, I'm on that page ready to go. That's how you have to treat these 1 minute trades right off the open, is you have to be ready to hit the buy order right when that first 1 minute candle closes, which is what we did on CCL. So to answer your question, why the first 1 minute candle? Because I knew that on news, things move in those first, that first 5 minute candle was a 200% move, right? Let's think about that. Had you waited for a 5 minute candle close, you would have been looking at a 200% move that had already happened. And that's why trading the open can be advantageous, but also, obviously, it's going to carry more risk. What was my strike for this trade? I took the 22 calls on CCL. The reason that I did that is I knew that with news that in-the-money strikes were going to be up a decent amount. CCL is very inexpensive premiums, and what I did is I followed my kind of rule. I went 8%, or like honestly in reality 5% out of the money. I was about $1 out of the money. CCL was trading at 20.74. I took the 22 calls. I didn't want to be in the money, and I wanted to be a little bit out of the money, obviously a little bit more volatility. And I took the 22 calls there on CCL, and like I said, they ended up printing 305% off the open. I did not use a limit order. I slapped the ask off of open. What I'll do is if I'm trying to get in something that is news-based, I will be refreshing and I'll be watching the price action simultaneously. Sometimes if it's something like CCL, I actually had my buy order set to 11, got filled at 9 off the open. Once I saw what premiums opened at, I think the spread was like 9-10, and I got that little dip down, and then I ended up filling like 9 right off the open. So where did I get the 2062 from? Okay, so let's go to the daily chart. This is a common question a lot of people are asking. So I'm going to clear my levels for you guys on CCL, and we're going to go from this trade kind of from the jump, okay? So let's look at CCL. We're on the daily chart right now, guys, if you aren't familiar. I'm going to kind of adjust this a little bit so you can see it a little bit better. Okay, so now let's look. So guys, if you look at the last time CCL was in this area, right? Let's look and see what happened. So back here in February, CCL was in a downtrend, right? And then on February 24th, we saw a massive green candle to the upside. And the following day, we saw another green candle, which was right here on February 25th. Now look at that high point that we saw on CCL, right? We saw that 2040 level come into play in a big way because that was our major resistance that we hit, right? And we had trouble with, right? So a major level there at that 2140 area. Now, the other area that I was looking at as a possible a breakout level on CCL, right, was the 2062 area. And if you look at right here, guys, confusing myself. Right there. Okay, so guys, if you look at our most recent day that we bounced, you can see that on March 31st, CCL, right, we had this big green candle to the upside, and look at what our high was, right? It was that 2060 level on that daily candle on CCL, right? And you can see that that was kind of a past area of support, and when we broke that level, we saw a big move down. So if you look here, our most recent daily close high was 2060, right? So for my daily breakout confirmation, I was looking at that 2060 level on CCL. You can also see that back here on February 28th, we had a high there of 2081. I mentioned on the live that if you wanted to be safe, you could use the 2080 level as your confirmation. Personally, what I did is I used our most recent daily close, like our high, right, which is that 2060 level, as my breakout spot. I knew that had been support in the past, and typically when we get over that level, as you can see, like for example, the last time we had a daily candle that broke that level, which was most recently, February 25th, we saw a move up to this 2060 level, and look at where we found resistance today, right? We found resistance. High of the day was 2153, right? So, and on February 25th, we saw major resistance at 2140. So right in that area, CCL saw a lot of resistance come into play. So that's kind of how I, found, okay, where's my target for this trade, right? And by looking at the daily, guys, you can really start to figure out these zones, right? Which is, okay, my most recent daily high was 2060. I'm going to look for confirmation over that at the open. And then my target is going to be, maybe our, most recent daily close high over that, which was February 25th when we closed at 2140. And look at where we found resistance today, right? 2150. Does that make sense? I took my breakout confirmation was this because our most recent daily close, right? The high of that daily close was 2060. That's where I said, okay, this is my breakout level. This is why I'm going to take the trade if it confirms over this level. Does that make sense, guys? That's why we call them key levels, because they cause moves up, right? Does that make sense? You guys can let me know in the live chat if that is computing, because I know that this is a beginner live stream. Don't be shy. It's okay if it doesn't make sense, or if it does, that's awesome. Okay, and you guys understand how I found my target, right, which was this 2140 area, right? And that was because our most recent daily close up, the high of that daily close was 2140 on February 25th. So you can say, okay, that's my resistance. We can reasonably assume that if CCL had gotten over 2140, we probably would have seen that 22 area come into play, right? As that was a former support area. And in February, we had obviously our daily candle hit at that 22 spot, right? Cool. Yeah, if we're talking about on CCL, when it hits resistance, why not try for puts? Honestly, at that point, I was actually still pretty bullish on the cruise lines. So honestly, guys, what I really thought we could see here, that is very bullish news. If the market doesn't take an absolute shit afterwards, and pardon my French, but if the market doesn't, do what it did afterwards, right, at that 2140 level, I think more than likely we see a daily candle very similar to what we saw here at the 2140 level, where we saw a move up to 22 and 23, right? That was the potential I thought we had, and that's why I took the Norwegian trade. Look, the reason that I didn't want to touch this to the short side, even though it hit off resistance, was because of the fact that if I'm going to short something, I'd rather short something that has relative weakness, not short something that has relative strength coming into the day. Honestly, I was really happy with the day at the point already. In the morning, I hit CCL for 300%, Twitter for 40%. And honestly, I wasn't comfortable with the tape as heavy as it was. I felt like we were coming into kind of a pretty big support area at 454. By the time SPY had that move down, I felt like I was chasing any move towards 451. Honestly, even though I had taken the loss on Norwegian earlier, I felt like I had kind of already hit my daily goal. I was happy. I didn't want to give anything back. And my biggest thing, and what I'm trying to illustrate to you guys, is there's no reason to force things. If it's not an A+ setup, don't take it, right? The one trade that I forced today, I took a loss on, right, which was Norwegian. And I'm going to show you guys what I could have done better on that trade really quickly, since we are talking about it already. Oh my God. All right, guys, so NCLH, that is what we are looking at here. I'm going to go to the 5-minute chart. Actually, use the 15. Okay, guys, so let's look at the Norwegian trade. This is the candle, just if you're wondering. I don't love taking 50 or 60% losses on things. We got stuck in this candle right here, which was at 10:15. I should have been more aware, honestly. I didn't think normally the woman that spoke to the Fed governors is normally more dovish. I took it with a little bit of a grain of salt, which I shouldn't have done. That was mistake number one. And mistake number two for me, guys, was that this was not an A-plus setup. And to kind of illustrate that a little bit more, I need to go to the shorter time frame, which is going to be the 5-minute, and show you what I did wrong. And because I do this every day, guys. I review my trades and I say, okay, well, this was kind of a bonehead move. Like, why did you do this, right? Now, right here, guys, this was the candle that I had entered on. We saw this major wick up into this area of resistance here at 21.43. Now, guys, when we saw this indecision candle here and then I saw the wick up at this 10 a.m. candle, CCL was showing a lot of relative strength. This was a serious bull trap here on the 5-minute, guys. You see this wick up on CCL, or excuse me, on NCLH. That indicates a lot of buying pressure coming in. Now, when I saw that, I did enter into those $24 calls. I thought that if we could break this 21.43 area, and CCL was gapping up to new highs, but for some reason, NCLH just found a lot of resistance at that area, guys, and I mean a lot. And then when you know it, 5 minutes later, we start to get into those Fed comments, and then the market really starts to get hit. And when that happened, guys, it was a really quick move down. I had my stop at this 22.80 level, right, which was our kind of low of the day at that point. And we saw a major move down through that level. At that point, contracts got absolutely nuked on that Fed governor speech. I'm not shy about it. Like, if I'm going to take a loss like that, I'm going to own it. And that's, that's the difference is, like, I'm not going to take that trade on the 10K challenge. But it was comfortable for me enough where I felt like we would have another CCL type of trade on our hands if we saw that move over 23.50. There was a lot of range to the upside. Where I made a mistake, right, where I would have done things differently looking back, is I entered in off this candle because I saw a lot of buying pressure come in on this previous 5-minute candle. What I should have done is waited for a break over high of the day. The risk to reward wouldn't have been as good, but this is a B setup, right? And this is where, I was feeling hot after CCL and Verizon was green, and I was like, I'm on a roll. I really like this trade setup on Norwegian because CCL is going crazy, right? Those contracts were up 300%. I was like, okay, clear lagger here on Norwegian. There's a great daily breakout here. And I jumped, right? And that is part of why trading is hard, is because it's mental and because you're going to make impulsive decisions like that. Even if you have a great control over your emotions, everybody's human and we're going to make mistakes where we say, oh man, like this looks great. The theme is hot, whatever. And then something like the Fed governors happen and you're stuck in a really, really bad trade. It sucks, right? But the whole thing is, guys, in trading, it is about keeping your wins bigger than your losses. I know it sounds kind of crazy, but even with CCL, it went almost 305%. That trade really made my day off the bat. I gave back about 40% of it on NCLH, but it ended up still being a pretty good day with the various wins that we did have. So while a trade like this can cut into your day, and for me, I look back at this and it's like this market needs confirmation. This is where you say, okay, even though this candle looks very bullish because there's a lot of buying pressure, I need to wait for the break over 23.43. Maybe the entry won't be as good, but it's better than trying to be a little bit early to that breakout trade. All right, so somebody asked, having trouble trading with a 1K account. I'm trading with $100 positions and seeing no growth in the account. Any advice? Okay, so here would be my 1K is a difficult amount. I'm not going to lie to you. If you're trading $100 positions, If you're brand new to trading, that's a fantastic amount. So if you're brand new, you're just starting to trade options, you should be shooting for $10 to $20 a day at most, right? Maybe even $5 to $10 a day is awesome, right? So if you're struggling with maybe not seeing account growth, take gains faster, maybe set a hard stop loss with that account size. So if you're trading with a really small account like that, maybe you say, okay, hey, if I am down 20%, maybe that's my hard stop. Like, that's fine if you have a much smaller account. You guys can tell, like, I'm very tight about my stop losses on the 10K challenge. Like, we haven't taken an intraday loss yet. Yes, we took a loss on an overnight, but so far the 10K challenge trades, they're managed like extremely strict, like very, very strict, right? I have a little bit more leeway with like a larger account where if like I take a hit on a trade like NCLH, I can rebound from it pretty quickly because I'm dealing with a larger amount of capital, right? Also, one of the big things, right, if you're trying to struggle with account growth on a smaller account is size a little bit heavier maybe on really, really good setups, right? So if you're looking at a great setup and you see one, maybe you use $200 as opposed to $1,000 or as opposed to $100. When I was trading with a 1K account, I was using about $300 per position. Yeah, so I'll go over the VZ. Yeah, so okay, so a great question. Somebody said if you have a mid-sized account, like should we not take, like, guys, I can't tell you what plays to take, what plays not to take. If I had an account under like 75, 80K, I would probably stick to the 10K challenge plays just because they're managed very, very strictly. They are managed with a lot of risk management in mind, and those are my highest confidence plays that are ever going to be put out, right? I'm really honed in. Not that I'm not on my high confidence plays, but those are obviously plays that I really want to be good because I know people put a lot of faith in them to some extent, and for the fact that, you know, I really spend time, like, you know, off of open, I'll trade my primary account. There's a lot of really big wins. There's some losses, but oftentimes on a larger account, those larger wins tend to really pad your account. So you can take a hit on you can take a 4K loss on Norwegian like I had, but I made, $9,000 or $10,000 on CCL. And it's like, okay, well, I gave back 40% of my day, but it's all good because I'm still, really green on the day. So if you're kind of newer, I would stick to the 10K challenge plays. Yeah, it's absolutely beneficial. I chart levels on the 15-minute and the 15-minute every single morning. In the Discord, there is an entire video on how to make your watch list every morning. If you go on that video, it'll show you that at the time I was using the 30-minute. Market was a little bit slower. I use the 15-minute primarily now. Every single morning in pre-market, I'll chart off the 15 or the 30-minute and come up with my key, pivot points for the day, right? Those key levels that we mentioned on the watch list. So on the 10K challenge, I do not use a hard stop loss. I use a stop loss based on levels. If I was using a hard stop loss on Twitter today, I would have gotten stopped out on that little bear trap candle down to 51.30. We ended up closing the 15-minute candle over 51.50, and Twitter ended up printing 30%, I think, 27%. And I got out of the trade for a nice profit. It was a base hit. I think it was like $130. I sold, 80% of the position in the green, took a loss on 2 runners, but still an overall green trade. So for me, on a 10K account, I'm not going to use a hard stop. If it's something like a 1K account where like maybe that's where you use a hard stop of like, if I have a max loss of the day of like $20, right? Or maybe my max loss on a trade is 25%. One thing you have to remember, guys, if you're trading weekly options, the wins are going to be big, but the losers are also, it's hard to take a, 3% loss. You have to be really, really tight. Oftentimes, if you're trading weekly calls, especially off the open, it's volatile, right? It's very, very volatile. It's kind of, it's easy to take a 20% loss or a 22% loss, especially if you don't get a fantastic fill. There's so many variables trading weekly calls. If you're struggling with account growth because of volatility, I would go for the next week out. So nobody's forcing you to trade weeklies. I trade weekly calls because I feel like I have an advantage there. Maybe your edge as a newer trader, right? go to the next week out, play April 14th calls or April 14th puts, right? If you see me taking a trade, take that same trade, but for the next week. There'll be a lot less stress. Things will be a lot less volatile. And, right, maybe your reward is less, right? Like you're not going to have as big of a move to the upside, but you're also going to have a much slower move to the downside if you're trading next week calls or puts. Yeah, exactly, 100%. Like the setup can still be valid technically. Okay, so how do you determine stocks that you are going to be charting or watching in pre-market? Fantastic question. So last night, I'll read any news that comes out after market. This morning, you'll see me tweet a watch list, and there's always a reason behind the watch list. So oftentimes, I'll look at the news bot in the Discord, see if there were any price target changes this morning. So for example, like on SQ today, there was price target change and upgrade to 165. That's why I had it on the watch list today. It's also a stock that I trade semi-frequently. So I have if you are newer, guys, one of the biggest tips that I can give you, and maybe you're like a brand new options trader, like you've been trading options for 3 or 4 months, one of the biggest tips that I can give you as a brand new options trader is focus on like 3 or 4 stocks, right? Like practice trading Apple, Nvidia, over and over again because they're easy. They move relatively slow. The premiums aren't super expensive. They respect levels well. You can use those EMAs and key levels and really come up with a plan, and that's going to allow you to trade other stocks better. So if you're a brand new trader, super small account, like $100 or $1,000 account, I would focus on trading like Apple, AMD, and Nvidia almost strictly, and then really practice charting out those key areas of support and resistance on the 30-minute and hourly chart and use those levels to your advantage and just really focus on 3 or 4 stocks to begin with. You don't need to be playing news plays or playing like anything super complicated outside of the realm of, okay, support here, I'm going to buy calls, or resistance here, I'm going to buy puts. Do I have any EMAs on my charts? So intraday, that's a good question. Intraday, I will use the 9 EMA oftentimes, and then I will use VWAP as the only 2 indicators that I use. Would you recommend SPY or QQQ for a newer trader? Going to give you a piece of golden advice here. If you are playing calls, play calls on SPY, because in a rising rate environment, QQQ is going to be naturally weaker. So if you are playing puts, play puts on QQQ. They are going to trade very similar. I personally like trading QQQ more, but practice trading both. I would learn how to trade SPY, and then when you want to play upside calls, play calls on SPY. If you want to play puts on QQQ. Learn how to trade both. If you are newer, I would probably suggest trading SPY first and then learning how to trade QQQ. Personally, I love trading QQQ, but, it hasn't had super high volume lately. So, also, if anybody is wondering, somebody asked, how do you know what stocks you're going to play? There is a list of the stocks that I play on a daily basis. It's a list of about 27 or 28 stocks. It's in the Discord, I think, under the Stocks I Trade tab, and then you can go in there and you will see a list, a Webull watch list that I built for you guys that shows you all of the stocks that I trade on a daily basis. I redo my levels on shorter time frames pretty much every week. So on Sundays, when I do the Sunday scan, I usually try to adjust my levels. But if something's like a major key level on the daily, I might color code it and then keep that level there like almost permanently, kind of to remind me like, okay, hey, there's a major key level. Like on Lucid, I have the 2240 level marked out because that's a major area of support. And like, I'm not going to move that level because it's helpful for me to like, okay, hey, like major support here on Lucid at 2240. I don't use volume too much. I will use so on SPY and QQQ, I'll be looking for like above average volume days sometimes, but I don't use like if you're talking about VPA, I don't use any type of VPA. Personally, I will use those if I'm swinging something. Like if I'm looking at a longer term trade, I'll use, start to incorporate VPA in some extent. But oftentimes for me, it's just key levels on those 30-minute and 15-minute charts. And that's how I prep for the day, right? And then intraday, almost primarily using support, resistance, and price action. How do I pick my strike prices? This is an awesome question, and I'm going to answer it, but I want to recommend there is an entire video on how I choose my strike prices in the Discord. I know that is like, I keep saying this over and over again, and it feels like, and I know, like, I get it. In the Discord, you go to the educational videos tab, and there is a video titled How I Pick My Strike Prices. It is right there for you guys. It's like a 10-minute long video. It goes over everything about how I pick them. I will tell you that I have a rule of thumb that I generally try to go 3 to 5% out of the money, at max 10% out of the money. If something is moving like crazy volume, like Twitter today, I'll play lottos on the $60 calls, which again is about 10% out of the money. Of course. Yep, I'll go over VZ. Let's talk about Verizon. So guys, one reason that I kept Verizon overnight is it had relative strength today. You can see how the market was relatively weak today. I'm going to clear the 9 EMA and VWAP for now. I like to naked chart when it's like this time of night. I stare at EMAs and VWAP all day long anyway. But anyway, Verizon had a lot of relative strength today. And the real reason that I'm swinging this overnight is because of the daily chart, right? We have this very bullish setup the last 3 days, guys. We have seen a really nice move to the upside, and we have a confirmed daily breakout. Verizon closed over 52.70. This is used to be a major area of support on Verizon, right, guys? So if you look, you can tell that Verizon, see all these wicks down, right? You can see like all the way back to the start of January, right? Wick down to 52.60, right? Wick down to 52.50. Wick down, wick down, wick down, wick down. What does that tell you? That tells you that there was a lot of buying pressure. That was support. This is called support, guys. When you see, a month full of wicks down to a certain level, right, and then bounces directly after that, that means that there is strong buying pressure at that 52.60 level, right? And we can see that by all these wicks back in January. Now, once we broke that level, we saw a big move to the downside. Now we've had another daily close over the 52.60 level. This tells me that we are getting ready to see a major move to the upside, more than likely back into this 53.80 level, which was our resistance spot. For me, guys, a lot of people like to transition into dividend names when the market gets a little bit more shaky. This is why they are called defensive names. So I am purely keeping this overnight based upon the daily chart. I think we have a fantastic chance of gap filling up to this 53.33 level, and then possibly seeing a move to 53.74. Again, purely based off the daily chart. That is why it was a smaller trade in size. I risked about 4% of my account. The reason I am risking that overnight is because I wouldn't be surprised if Verizon opens over 53 tomorrow. And if it does, and say we go to this 53.33 level, right? Those calls will be in the money, and those will be a triple from the area that we got in, right? So from 15, those would be trading at 45 plus. That would be, right, an easy 200% gain. It makes sense with the way the market is trading right now, and I absolutely love this daily chart. This was one of those charts that was just kind of screaming at me all day. It's a, high confidence as an overnight can get for me. How do you learn key levels? How long did it take to develop? Thanks, brother. This has been very helpful so far. Yep, I'll take in the money calls often. If the market is more volatile, so when the VIX was up at the 20 or like really high 20s, back like a month ago, yeah, I was definitely absolutely taking more in the money calls and puts. So you picked VZ because it's a defensive type of trade. That is one reason I took it. The other reason I took it is because we closed over, right, this 5260 level, which, as you can see, was a major area of support for us in February and January. And when you reclaim a key support like that, that usually indicates a very bullish move to the next resistance area on the daily chart, which would be the 5340, 5350 area. And the flow is great on VZ today. Has this been helpful so far, guys? Like just like me kind of breaking down like why I'm taking the trades and like what's going into them. Is that helping out? Hopefully it is, because I want this to be beneficial, especially because I know there is a lot of newer people in here. So I hope this is kind of making sense. And of course, yeah, I want to make sure I'm not just like obviously kind of harping on the same things too much. I want to kind of nail some of these things into the yeah, definitely, guys. One thing I recommend is when we have the live streams, make sure that you guys bring a notepad and paper, write these things down. I showed this to the room a few months ago, but I used to have a notepad, guys, and it would have like all of the notes. I self-taught myself like almost everything. I wish I had something like this Patreon to like, I wish I had all those educational videos. I wish I had these live streams to ask questions on, but I didn't. And so I self-taught myself like almost everything by trial and error, right? It took me, 24 months of nonstop work and grinding at my craft, right, to get to this point. And it takes time. One, it takes trial and error. You have to be okay with paying market tuition. That's why if you watch my video on if I could do it all over again, if I had to start all over, which if you are in the Patreon, I almost highly recommend you go watch that video of if I could do it all over again, because that's going to cover like all of the pillar things that led me to where I am right now. And it will really, I promise, not be a waste of your time. Do I use unusual whales for flow? Nope. I use cheddar flow. I don't think my link, I don't like care about my affiliate link that much, but I use cheddar flow. I like the service better. User interface is great. Yep, this will be uploaded. Can you guys hear me? Okay, cool. And some people I use actual candles. That's personal preference on the wick or the candle. Personally, I use the wicks most of the time. You can use candle body and wick. It's up to you. If you're newer, you probably are better off going with the wicks. If you are having trouble getting into the Discord, DM LD Trades on, or just DM the Patreon. Nope, I had an alert set on VZ for the break over 5270 or 5260, excuse me, which was that daily level that I mentioned. Do I think the edit button on Twitter will affect price? Probably not too much. See, there's another good one. How do you know if you placed your key levels correctly? Trial and error, guys. You go into the next day and you watch like. So for example, right, let's go to NVIDIA. This is a good question, and I know there's a lot of newer people in here. Okay, so let's clear my levels on NVIDIA, right? Okay, so if I was making my watch list, right, I'd look at the daily chart, because you want to start by charting out levels on the daily. If you're practicing, like you've never charted levels before, you're brand new to this, you'd say, okay, well, the last time NVIDIA went down, it hit this 255 level, and then it came back up, right? So tomorrow, like tonight, you would place your level at 255, and then tomorrow you should be patient, not try to take a trade, but just watch and then see, okay, does NVIDIA come back to 255 again? And if it does, and it bounces there, that means that you charted support correctly. Does that make sense? Somebody asked that question. How do you know if you charted your levels correctly? You learn by charting your levels the night before, and then the next morning, watching the stock trade, and then saying, okay, like, it's bouncing off of this area. Like literally LD, I was teaching him how to chart levels like 6 months ago, right? And the way that he learned was by sitting there and watching, right? He didn't even trade for a few months. He just watched and said, okay, like NVIDIA keeps hitting this area. This is my support, right? He charted out those levels the night before or the morning of, and then he got really good at trading NVIDIA, and now it's like the only thing that he trades. He's good at it, right? Does that make sense? If I after 10:30 in the morning, I use the 15-minute. Before 10:30, I'll primarily use the 5-minute chart. I don't look at volume, IV. I'm scalping these options. I don't care about the Greeks as much. Unless it's something crazy and the IV is like nuts. Like on Tesla, sometimes the IV or theta can be crazy. You might want to take a peek at the theta or IV before you take that trade. So you start with the daily for the watch list. On weekends, I check the weekly and the monthly. I'll check the weekly on the weekend and then move to the daily pretty quickly. Do you play a bounce like you were saying on NVIDIA, or are you more of a breakout trader? I play bounces, everything. When I was starting, I started by playing support bounces. That was what I did when I started trading. I would wait for a bounce. Like if NVIDIA comes down to 255, I would try buying one contract of the 260 strike and then seeing if, the trade worked, right? Does it bounce off of 255? All right, guys, I'm going to answer like 2 or 3 more questions, but somebody asked how to chart key levels. That's the best way to start doing it, is practicing charting on the daily, and then you come to the shorter time frames like the 30-minute, right? And on NVIDIA, right, if we look, or like maybe use the hourly is probably a better time frame to start after you look at the daily. You can see that NVIDIA has strong support here at 255.72. That's that same daily level that we saw before. So that's a fantastic area. If you're new to charting and drawing key levels, go to NVIDIA tomorrow, draw a line at 255 and say, okay, I'm going to look to play calls off of 255 because we have support there. How long did it take you to get confident in your trades? A long time. It takes time. This is a feel. This is a mental thing. It probably took me, I would say, at least 10 months before I started getting really confident in like taking my positions. That was before, it took me probably 8 months, maybe. 8 months would probably be like the time frame. 10 months would be a little bit too long, but is there a good way to tell if premiums are expensive or inexpensive? That comes from knowing the stock that you're trading. So for example, like if you look at a stock and you trade it all the time and maybe like, for example, today, right, on Verizon, those premiums are extremely cheap. If Verizon was trading at 20 or 52.85, which is 15 cents away from being in the money at 53, it's a Wednesday and they're trading at like 15 cents. Those are cheap premiums, but you only really know that by trading it and knowing what they look like when they are expensive. You'll get a feel for it. That comes pretty quickly. I would say within the first 2 to 3 months, you'll start to understand, okay, these premiums are really juiced. Another way to look at it is you can look at the IV. If the IV is super high, like over 200, that means those premiums are extremely juiced. I would try to stay away from things with a IV, over that 200 level, unless it's like a lotto. Yeah, be patient with it. Let your strategy develop. Let yourself have some time. Like it's going to take a little bit of time to learn and really develop. Like this doesn't happen overnight, guys. Like this isn't a get rich quick scheme. Trading is a battle and you're taking on a serious battle with your own self. Your biggest enemy is going to be your mental. So you have to commit to mastering this and commit to, okay, hey, I know that this is going to be one of the hardest things I've ever done. If it wasn't hard, people wouldn't make a lot of money doing it. If it's easy, it's probably not worth doing, right? That's one of the favorite quotes of my entire life. Dollar amounts. I have a set standard size for every trade. On my main account, it's usually 5 to 8% of my account size for high confidence trades. And on the account challenge, I'm doing 14 to 15% of my account on the 10K account. Yeah, that also depends when you're talking about IV rank percentile. If you're trading high growth tech stocks, IV is almost always going to be, if the VIX is elevated in the, it can be in the 70 to 80 range a lot of times as well. But yeah, anything over like 100, 150 is getting up there in terms of IV. Yeah, of course. It's been about an hour, guys. It's flown by. I will definitely do another Technical Tuesday. I've answered what feels like a ton of questions already. Hopefully a lot of them were helpful. This stream will be recorded, and we do have 2 weekly videos that are coming out. One this week about how to use Cheddar Flow and look at flow on options. And then next week, we have a video coming out on how to trade the open, my top 5 tips for getting orders filled and being able to trade the open successfully. And I'm going to do another Technical Tuesday stream the last week of this month. And hopefully that'll be another time you guys can come in, ask questions, and we can go over some trades and things together. I hope you guys have a fantastic night. Like I said, the stream will be recorded and available at the link below to view in the future. Have a great night, guys. Get a good night's sleep. It's late. Let's get some sleep and absolutely kill it tomorrow. Peace out, guys.